This is a Stock Trend Reality Podcast, episode 158.
And he made $1,000 in a day doing this robotic trading thing. I went home and I Googled robotic trading, and up comes ClayTrader.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. When it comes to top golf, Clay's greater than Ches. ClayTrader.
Now, my esteemed co-host, who goes by the name Ches, I think he knew this was coming. I'm pretty sure he knew this was coming. But yes, when it comes to top golf, I don't know. Do you remember who won that battle there, Ches?
How could I ever forget? You're going to hold it over my head forever when I didn't even know how to swing the club correctly. You
Ches,
let me fail.
First off, Top Golf, if you've never done it, I mean, and you have one that's nearby you, what kind of life choices are you making? Go do Top Golf. But we did Top Golf when we were down in Florida for a meet and greet where we hang out with other members. And, it keeps scoring all that. And I was kind of just getting my feet wet, trying to figure out what was going on. And then I noticed that within the scoring, Ches was beating me. And I thought, wait a second, this is unacceptable. So my competitive juices kicked in. And long story short, I did end up beating Ches. However, IT Nate, the producer of the podcast, he whooped both.
He just cleaned up.
In fact, there's the vlog that documents all this, but he may have even beat our combined scores, you and I. I think that's how much the bloodshed was. Yeah. So I sit here and I'm, having a good time with Ches, but in all actuality, well, you know what, Ches, we have an excuse though why we're here actually being interactive and talking with guests and trying to, just be helpful. He's probably out golfing right now. So, we have an excuse.
Last I heard, he had that driving range in his backyard. So he's probably out there right now. No wonder we always have to wait when we need tech support in the community. Jeez.
Yeah, no kidding. So actually, I'm not going to be humble. The only reason why he beat us is because Ches and we're doing this and he's out at the driving range. So anyways, in all seriousness though, Top Golf, definitely go. Is it possible for him to chime in? I'm waiting for him to just ambush us and try to defend himself, but maybe after the recording's going, I don't know. Then come on,
he'll
Nate.
do something.
Nate, come on real quick.
We'll see.
Nate, what are you doing right now? This would be good, Nate. Come on. So, did you like?
My mic is going to sound so bad.
No, it sounds good.
A good mic hooked up.
Yeah, there we go. So, what are you doing while we do this, Nate?
I was eating dinner.
Ting. I hear him swinging over there, isn't it?
Yeah. That sounds like dinner, all right. But anyways,
Yep.
All right, Nate. Thank you for your quick guest appearance here.
Your comment about golfing today, it is actually warm enough. I could have gone golfing today.
But
that is a plausible possibility.
But it was raining all day, so maybe I guess it's possible. But anyways, I really got to keep this thing moving because we have a live webinar here. But anyways, Top Golf, if you have not done it, do it for sure. And I want to talk more about it, but I'm pretty sure there's another fun fact that will get us back into Top Golf again coming on in a later podcast. But for our guests today, we have Fred, and his screen name is Fred from SC because he's Fred from South Carolina. He's in the chat room usually every Tuesday night as part of the webinar, and that is what I was alluding to earlier. We've already recorded the interview. And right now, the live webinar for the Clay Trading University students starts in 11 minutes. So that's why if I sound kind of like we got to go, that's kind of why. But he's definitely in the chat room then if you're ever around on those Tuesday nights. And he's been around the markets for a super long time. He's been around Clay Trading University in the inner circle for a while. And he's got a lot of insights. He's been through quite a bit. Ches and I discovered he's kind of hard on himself, but he's definitely trending in the right direction. Now, so let's hear
this a little
reversed and hear all usually about his journey. People come on the podcast and then later on they'll be like, yeah, you can interview me for Clay Trading University. We do live webinars, and sometimes I'll interview Clay Trading University members in detail about their trades and what have you. And Fred has already done that. What was that, Fred, like a month ago?
Yeah, it was a few weeks ago, a couple of weeks back, something like that.
But here Fred is now. After doing that, he's coming on to the podcast itself. And I don't know. I think the webinar would be more nerve-wracking than this because it's not only myself, but I open it up to the community and we all roast the person with questions. So, I mean, it's questions all over the place. So here we only have me and Ches throwing questions at you. So I think that Fred is out in the clear, but I guess that remains to be seen. So, Fred, first off, thank you for hanging out with us this evening as we record this. But where did all this start for you in terms of your journey? Where did you hear about the markets, and what got you to the point where your interest got large enough where you were like, you know what, I want to try to get a little bit more hands-on with all of this?
Oh, wow. Okay. Well, I guess I heard about stocks in school, and then Trading Places came out. I watched them on commodities, and that was hilarious. And
Is that the one with Eddie Murphy?
Yeah, Eddie Murphy and Dan Aykroyd. So
that's right. Yep. That's the one where they pull like I guess it's somewhat of a con, isn't it? And then they go short or something against some guy.
Yeah, they got a report on frozen orange juice that ahead of it coming out, and so they got in there and they kept selling a bunch of it as the price. Or brought a bunch of it as the price was going up, and then when the report came out and it crashed, they were just selling it off, and they all got rich and sailed off to some Caribbean island.
That's right. Okay, I am thinking of the same. Ches, have you seen that one?
I have, but it's been a long time. I mean, I haven't thought of that movie in forever. And I'm just happy to hear that that was what one of the things that got you into trading.
Well, that was one of the things that got me thinking about it. And then in '87, we had that big bad day. Of course, that was before y'all's time, where everything went to heck. And so I went down to a local brokerage and talked to those guys. And, I said, well, it seemed like a good time to get into the market. What should I do here? And I live here in South Carolina in Spartanburg. And the guy said, well, you should buy Denny's. And I said, Denny's? Denny's is a local corporation, and I don't know whether he's getting some kind of kickback from pushing that or what. But I decided...
You never know with those brokerages.
So I decided, no, not quite yet. And then I guess, looking around or something, somehow I got on this mailing list for doing different strategies for trading options.
And what year was this, though?
Oh, this was the mid 1980s, or 87 is when the crash happened. So, somewhere in that time, I had signed up, and this is back before email, so I was getting letters in the mail on these different ideas about doing spreads on sugar and stuff like that. And I was looking at that and really didn't have any money. I was more dreaming than anything else. And
now this brings up an interesting question. So this is back-to-back weeks now for us, Clay, where we've had people who've been trading in the market pre-usage of internet brokerages and much easier accessibility to internet. So I mean, were you getting your price information from the daily newspaper? Or we always find this fascinating because people do it.
That's where you had to find it, and I was looking in there and studying and paper trading stuff. And at that time, I never got to where I felt comfortable enough to do anything. And then later in the 90s, when dial-up was still going on, I had signed up for another email course in how to study patterns and stuff. And I was doing that, and come to find out this guy had a satellite system, and he was day trading, and he was coming up with all these fancy names for like a cup and saucer and stuff like that. And I was looking at that, and I guess he sold my name to some brokerages or something, and I had some brokerages call me up, but I don't know, commodities, there's a lot of risk in that.
There is. And before you go any further, I just had a curious question because, I mean, 87, as you noted, Chuz and I, we didn't live through it or anything like that. Well, I lived through it, but I was like 4 years old. But the market was crashing, and it was a very scary time. Yet you made the comment of, well, I figured that might be a good time. So I walked down to my local. What in your mind when the vast population was freaking out? I mean, what made you? Everybody's running towards the exit, and you were kind of running, or you were walking towards the entrance. I mean, do you remember what your state of mind was? But I found that fascinating how you just figured, because I'm assuming the headlines and the newspapers and everything was just mass chaos, yet here you are. That's what actually made you want to talk with a broker. So, I mean, can you walk us through your kind of viewpoint and your psychology at that point in time?
Well, the best as I can recall, it happened in like a day. I mean, it just boom. And I can remember Reagan said, well, markets go up, markets go down, no big deal. and I must have heard it on a newscast, or maybe I was watching Louis Ruckhauser on PBS, but somehow the idea got in my head. Now's the time to think about buying, and I only had a few $100s, so I went down, and this guy I saw at the brokerage, he just didn't really impress me. So, he didn't come and say, well, you really ought to be looking at buying Procter and Gamble or, Colgate or, some of the steadfast, good long-term stocks. And so I just kind of shrugged it off and, kept plugging money into the old 401k at work.
Okay, and that's true. I mean, but even in my mind, to see a crash like that happen, even if it recovered, I mean, you would still think that shell shock would still be out there, and yet here you are. That that still caught your eye, which was pretty fascinating.
Yeah, and it's so long ago, I really can't remember what made me do it. But
well, come on, Fred. It's not like it's 20 years ago or 25 years ago. I mean, I don't think I'm asking that much. I'm just trying to ask you to remember your mental psychology 30 years ago.
So I have a tough time remembering stuff from 2 weeks ago.
2 weeks? Well, anyway. Hey, it's 2 hours ago for me, so you still got a better memory than I do. But all right, well, I'll fast forward you back to where you were. You were getting those cold calls and doing spreads on the sugar and all that sort of stuff. But you made a comment that was just too much risk for you. So, I mean, I guess what did you do at that point after you had determined that, this stuff is just too risky for my liking right now?
Well, I was looking at it, and I had a couple of brokerages call me up, and this one guy called me up, and he sent me in a letter and he said, hey, we see this pattern in pork bellies. And if you buy these pork belly options, and I can't remember when they expired or anything like that, in past history, it's paid off. We see this setup. So I said, well, okay. So I put some money into it, and I'm watching it every day, afternoon on the paper, and it's dogging out. So I called him back up and I said, I think we need to sell that and look at something else. And he said, oh no, we don't recommend customers, get out of it because the market can turn around or whatever. And I just said, oh yeah, well, he's probably ripping me off. So that was the end of that. But I was naive, and I thought, hey, broker's supposed to help you make money. That's why you hire the guys. So if you wanted
it's cruel how that works.
Yeah. But, if he wanted to keep your business, he'd be trying to make you money, right? So, but that's not, I don't know, maybe it was, maybe he just screwed up. But I just kind of walked away from that. He tried to get me to buy some other stuff, but I didn't do it. He had his one shot and he blew it.
So did that trade, so obviously you were up on that trade, did it eventually turn around and you didn't make any money on it?
No, I lost.
So
they expired worthless.
It's cruel.
Yeah.
Yep. It's cruel that you're up money, had you thought about selling it, and you listened to the recommendation of somebody you thought you could trust. So I'm going to take a wild guess here. At some point in the near future, you're going to start realizing that you need to kind of take control of your own monetary interests and figure out a way to do that. Am I leading the witness here or no?
A bit, but this is mid 1990s. So the connection to the internet at the time is dial-up, and most likely going through AOL or to a bulletin board. And the internet's just starting up. And so really, if you wanted to get live data, you either had to have a satellite system, with a dedicated monitoring computer to it, or you just went off the newspapers, or you could go get day charts, but that was about it.
Right. So, did this, after this last ordeal with that broker, unfortunately, did this lead you to kind of focus more on, I'm just going to keep money, putting money into my 401ks and
Yeah, that's
get
what I
less
did.
active? Is that what you did?
Yeah,
And for how
yeah,
long did
that's
you
what
do
I.
that, I guess?
Well, right up until I got smacked by the dot-com bubble. I was in a bunch of money market funds that were heavy in the tech stocks, and they were roaring. It was doing great, and they had a lot of hardware and stuff in there, like Cisco and stuff like that. It wasn't all that much with the websites and stuff. And when all that crashed, I was sitting there thinking, man, what the heck? And finally got out of that, but that hurt. That really hurt. That took a lot of money. And so then I got more diversified in my 401k. We had a few things we could select from. It wasn't like we just put it somewhere. You could make your choices. And so I guess it was um, 2003 or four, somewhere in there. I put together a few thousand and went and opened up an account and looked around for something to invest in. And I thought at the time, well, gold would be a good thing. And I think I went up on Motley Fool at the time, had some boards, and you could go up there and, paper trade and stuff. And I went up there looking around for ideas. I saw these few gold mining outfits, and one was trading about $4 and something. And it looked like it was in an uptrend. So I said, well, I'm going to buy me some of that. So I did that and doubled my money after a month or two.
Hey, there
And
you
I
go.
was away on vacation and sitting out there, in front of the condo, looking out the ocean and stuff. And I said, well, I'm 6 hours behind the market here. If something goes crap, I'm gonna lose all this money. So I closed it out and just waited until I got back home. And when I got back home, I looked for other stuff to invest in, and then I didn't do so hot with that. And that went back down, and then I just kind of backed off of it for a while. And
Now, when you say you didn't do so hot, I mean, people love other people's misery. So, I mean, this is
well,
just,
I pretty
I
much
mean,
I put it in some stuff that went way down, and there's still a few $100s in it, but it's I
I guess,
quickly learned I
what
didn't
was
know
your
what I was
logic at this
doing.
point in time? I mean, I know you know what a trade plan is now, but back then, what was your actual trade/investment plan? What was causing you to
The
buy into
trend
these?
the,
Just
the trend is your friend. If the trend's going up, get in. If it turns on you, get out. That was it.
now, you
So,
mentioned though that you still have a couple $100s left in those.
well, yeah, I'm in rig. I brought it at like $40 and it went down to where it is now.
No, but didn't you
I
just
should have
say you
gotten
get
out
out
of
when the
it.
trend is no longer your friend, but you're still holding
Yeah, I
rig?
should have, but I don't know. I was thinking it's going to turn
Shoulda, coulda,
around.
woulda, right?
Yeah, it paid dividends and all this, and then they stopped paying dividends. And so, yeah, I gotta sell that off next time it pops up a little bit.
Or I mean,
But
we've had
anyway,
members that they always have kind of that reminder position that they just keep in
yeah,
their portfolio, so they stare at it and it just kind of is like the ongoing salt in the wound just to remind them. So you could
Yeah, the
probably use rig
reminder.
to, yeah,
yeah,
as your reminder position.
yeah. That's it. So, me and a few other guys I work with were always talking about, oh, or we could put some money here or there, talking about different stocks to invest in, and just more or less kind of throwing a darts at a board or something. And how well you doing in your 401k? Which funds are you in? That type of thing. And so I'm getting closer to retirement, and I just really didn't like the idea of turning over the money I've saved up and my pension to an annuity and to a bunch of insurance guys when I can go out and pick out blue chip stocks just as well as anybody else. But I wanted to learn more about it. So I was looking around at stuff and different newsletters about, you can invest in these things and that. And this buddy of mine came up and he said, "Hey, there's a co-op down here in the Southern Hall, and he made $1,000 in a day doing this robotic trading thing."
Hey, I've heard of that.
Well, and I said, "Well, that's interesting." So I went home and I Googled robotic trading, and up comes ClayTrader. And so I'm looking at it, and you have where you can get into the chat room for $99 a year. And that's, still had that book on charts and stuff I had from way back. And I said, well, I'll just get in here and, and look around and see about the tips and stuff and
Let me just quick
see what I
interrupt
can
you.
pick up.
Timeline perspective,
Yeah.
what year is this?
Well, that's about 2 years ago when I first
All right,
started CTU.
Okay. So 2016 is when. So a lot has happened. I mean, this whole journey started in '87, and now we're all the way up to 2016. So I mean, we've covered a big time span, and this is just what fascinates me. I mean, it's just you've been around, you've seen a lot, and like Ches noted last week, we had somebody that was in your shoes too. And I asked them, and I'm going to ask you real quick, but I'm assuming that your mind is probably just blown. You are just mind boggled to see how readily available information is now compared to when you first got started. Is that something that just kind of just blows your mind?
It's just totally insane. It's when I started working at the job I currently have, there wasn't even really networking except for connection to Unix systems or token rings for PLC. And it was sneakernet. We ran around with floppy disk, loading up programs and stuff. And it's totally different. The amount of stuff I've learned in the last 23 years is just mind-boggling. It's just unbelievable, really.
Yeah, and like I said,
you can't even imagine. It's
I mean, I just hear about
really,
you having I watched it all the time. Oh, well, I mean, by checking the afternoon newspaper, it's like, that's crazy. And then last week, the guy said he'd run around to multiple stores to find the barons so that he could read about stuff. And I mean, we have it good, Ches. We have it good.
The local newspapers would have, the S&P stocks listed in there at the end of the day every day. So if you had a daily, subscription to the paper, you could look in the morning paper at what went on yesterday. And so that's the time lag.
Yeah, and people complain. Well, I mean, not that people should trade based on a 15-minute. Yeah, I mean, I think now people complain, which they should, about the 15-minute time delay. But here you are, you're on it. Literally, here's what happened yesterday. But anyways, we got sidetracked a little bit, but. You had heard about this robotic trading. You were looking at the chat room, and it sounded like you decided to start with the chat room, I think. So I'll pick it up from there.
Yeah, that's what I did. And I'm in there, and I'm in there when I could, and I was looking at, some of the things that come up and, strictly in lurker mode, because I definitely read all the warnings about, how to put stuff up and stuff like that. And I didn't, and I guess I was smart enough to realize I knew less than nothing. So I was just in there, looking for tips, and then I'd pull up TradingView and look at the stocks, and or maybe even it was Fidelity. Oh, it was TradingView. I think I had that. I got into that because I saw that on your resource page, but I don't think I had it subscribed to it.
Right, and they definitely have a free kind of platform as well. So you're in the community, you're in robotic trading. Now, are you going to utilize, I guess, what was your kind of goal coming into it? Was it, I'm going to swing trade on the daily charts after I learn about them? Am I going to day trade in the morning or something like that? What was your end goal, I guess?
I was just looking for tips. I figured I didn't really need to learn about charts and stuff because I'd studied them before. And I got in there and I saw, all the lingo going on and stuff, and I quickly realized I didn't have a clue about what you guys were talking about. So I, was looking at some more of the videos Clay has, and one about investing in education, and, I thought about that, and I thought about all the money my daughter had just spent to become a lawyer and stuff, and I said, that's nothing. I got that money in the bank. So it was a week later, I think I signed up for CTU, and I started getting into it, and it was just phenomenal. I mean, the the detail and the stuff that Clay goes to, and then uh, I use statistics in my job for analyzing test results and stuff, and I was looking at that, and I said, "Holy cow, this is just great!" And I spent months, and I came to my first webinar, I think, and Clay said, "Oh, if you're new, you're way here and all." And I got to looking at it, and I just realized I don't know near enough to follow this yet. So I backed off and just buried myself in robotic trading, and then did the advanced robotic trading, and then I started coming back to webinars and doing more of the classes and studying. And even today, I'll find myself going back and going over stuff.
Yeah, well, and I'm just happy to hear that, you being using statistics and kind of odds and stuff like that in your other lines of work, that you kind of thought, oh wow, look at this, instead of throwing darts at the board, now you can actually, there's a method to the madness. So how long would you say you were kind of just nose down into the books?
Oh golly, 6 months or more.
So was
I
this?
mean,
Oh, I'm sorry, Jez. Go ahead.
Well, I was going to say, so that's a good amount of time. I'm happy to hear that. So were you putting in time every night or just whenever you could? Because a lot of people we seem to find have a difficulty, I guess depending on how busy on your life is. But when were you finding time to study? Because I always find this fascinating with full-time jobs, and you fall in the camp of no excuses. You got it done, you made time for it, and you did it.
Yeah. Well, I have to multitask in my job, and sometimes, once I get things dialed in, I can sit back, and so I watch videos at work, and I came home and I watch videos in the evening. We're empty nesters; all the kids are moved out, and so I studied both times. And one of the inspirations, I was listening to a podcast with Sean in it, and she was talking about what she did and the things she had to do in her personal life, and studying 3 hours a night, and working in the evening so she can trade during the day. And that was inspiring. And I looked at what some other people did, and I said, well, if those guys can do it, I can too. And I just buckled down to it, and I've still got a long ways to go. I'm learning stuff all the time, but it's truly been a lot of fun. But, some frustration, but a lot of fun.
Yeah, when I mean, Fred, you are definitely a regular at webinars, and I'd like to think we have fun there.
Well, we do, and you make me laugh a lot. You can't hear it, I know, but that's some of the
Hey,
stuff
at
you
least that's
say.
one person.
Yeah, and it's for me, and I told some friends of mine at work about CTU, and um, for me, the classes and all, they're great, and you couldn't do anything without them. They're absolutely awesome. But probably the biggest bang for the buck is a webinar on Tuesday night. It's just the stuff you pick up in there, even when we're doing trading plans or top-down analysis, or you get one of the other experienced folks to come in and talk about their trades or their approach to things. It's just phenomenal. I, I can't get
Isn't it
over it.
amazing
This is some of the
how
best money I ever spent.
and even from where I sit, and when I bring on other people, it's amazing how different everybody views the market, how different everybody kind of approaches and puts things together, yet it's the same in the sense of we're all using the same tool of technical analysis. But even within the umbrella of technical analysis, I'm with you, Fred. I'm amazed too, and that's why I love talking with other traders and bringing them on to that, is because it's just, yeah, I wouldn't do things that way. I wouldn't use the tool of charts that way, but I understand why you are, and you're not wrong. So there's just so many different ways that can go about it. Now, I just had a question for you, just I guess from more of a teaching angle too, that I'm curious. So you showed up in the webinar, And then I know exactly where you're talking about, where, I go through my spiel, if you're new, then don't be down in your house, so all that. And then you thought, all right, I need to get out of here for a while because this is a little too advanced for me right now. From that point until you came back, how long was that? And then what courses did you actually go to and get through until you came back to the live webinars?
I went through robotic trading, and I was into robotic trading skill sharpening. And then I came back and I very much lurked for a bit. And then I started, working on, as we got into RVR, I started, putting together trade plans and stuff and making stupid mistakes and doing things like, oh yeah, green is green, get out now, and stuff like that. And, but that's just all that stuff you teach us in there. It's just awesome.
So you
Not that I still don't make
you
mistakes,
got back,
because I sure do.
you revisited. How long were you actually on paper? I like when you said your nose was in the books, your nose was studying. How long did this all go on before you decided to actually start to put on real money? Or were you doing real money trades as you did all the studying in small controlled ways? So I guess kind of walk us through your education alongside the status of your account in terms of how you were handling that.
Well, I went and paid for TradingView full, where, at least where you got live data and stuff. And it's got a paper trader in there, so I was paper trading in that. And then I took a couple of thousand and opened up a TD Ameritrade account. And I was sure I had rolled over some of my 401k into an IRA and was, buying some stuff and doing some trading in there. I let's see, I think it was a trampoline trade. I was over Christmas. I was at my computer, and I saw this one. I think it was KOOL came up, and it was building pressure, and I got in it, and I just hopped in there right quick, and I said, okay, let me buy 10,000 of those. Popped in there, got in there in the next 5 minutes, it's way up. And then it starts coming down, and I'm, sell more, and trying to get out. And I ended up making a couple of thousand on it, but it had shot up, big bucks. And
a trampoline on you, which is what you, there you go.
That's what, it was all about. And so I was saying, well, that's pretty cool. Maybe I got this down. And so then I went with a smaller size against, I think it was June. And June wasn't near as liquid as Cool had been. And it was trading in nickel increments too. So I did a little chasing on there and ended up getting burned a little bit on that one.
Now, are you doing this with shares, I'm assuming?
Yeah.
Gotcha.
Shares.
Okay. So.
Yeah, and both of those, are $1 or $2 or something like that. So you could go in there and, get a couple of thousand shares and not be too big a position. Well, I mean, a big one, but not super huge.
Now, you mentioned a couple words which usually do appear in the same sentence: chase and burn. You said you did a little chasing and you got burned, and I can I will attest to that. I'm sure Ches can too. That usually when sometimes it'll work out, but eventually, when you are chasing, at some point in time you will get burned. So I can't say that I was hugely shocked, to hear those words show up together. They have a relationship with one another, I guess. And if you have never traded before, you'll quickly find that out if you decide to just. Like, now those guys on that podcast, what are they talking about? No, I'm going to do it my way. Well, don't worry. You'll see. You will see. But I guess my question to you is,
it's still tempting.
You're trying trampoline, and you do options now, right?
Yeah.
So, where did all the options come from? What got you interested in options? And let's kind of go down this rabbit hole because, options can definitely be a great vehicle to trade.
Yeah, I got through RVR and trampoline and shorting for profits, and I think about that time you came out with the Forex class, And so I looked at that and I said, well, hey, that's something I can do in the evening. And Forex was on TradingView, and so I paper traded that. And I remember we had one class about looking at a particular pattern bouncing off of some support or either running into some resistance. And after class or webinar was over, I went with my laptop and my wife was watching TV, and I had it open and I was watching the Euro USD, and I sat there and I put in a trade, and just, I don't know, about half an hour or so, would have made $800, but it's all paper. And so I said,
Did you say you would have? Because this was, were you practicing? Was this on paper, or was
yeah,
this an
yeah,
actual trade?
it was no, it was just paper trading and
Okay,
TradingView.
all right.
TradingView has a paper trade account. So I'm sitting there, well, maybe this is something to do. And so I tried that for a little bit with, smaller amounts of money. I definitely was trying with too large of an amount when I was paper trading it. And I just couldn't get used to the spreads and TD Ameritrade and the way, they offset you by a, a couple of points, when you go in or when you sell out. And it was tough for me to set stop losses and stuff with that. So
Yeah.
after fooling around with that for a bit in the spread and stuff, I said, well, that's really not working for it. So then I went back to paper trading stocks and learning stuff and trying different things out. And so I've did the first option course and paper traded that for a while. And then I think I was on vacation. I was down at my daughter's house and I had my TD account open and I got in Tesla. And I think this is about the time Rena had done either a webinar or a podcast. And so I was got in there and I made some money. And I remember I think she made a comment. She was on the webinar after that. I think we traded the same time period. But at any rate, she said, well, that was easy. Anybody could make money right then. And I was thinking, oh, wow, hey, I'm doing pretty good. So I did some more trades with Facebook and stuff. I'd get them going, and then I'd go off to a meeting and pull up my phone or something. And when it looked like it was getting to where it was, I'd be following it up with a stop loss. And when it tripped my stop loss, I'd scalp off a few $100, and I'd say, oh, that's okay. That works. So I took some time off from work just to see, okay, well, let's give this day trading a try. And I had rolled over part of an IRA into Thinkorswim and TD Ameritrade, and I sat down one day and I'm watching Tesla, and I said, well, that looks like a good spot to get in, so let's do that. And then I'm buying 10 contracts, and it's moving thousands of dollars, in seconds or minutes. I mean, it's
Oh
it's
yeah.
moving fast. And I, sitting there, and first I'm up, then I'm down, and then it come down and hit my stop loss, and then I'm out. And then I said, what, dag nabbit? Okay, and watch it. Okay, there's another point. Looks like it might be a good spot to get in. And so I'd get in. And so I had FOMO going on big time. And so in the course of a couple hours, I blew out like 2% of my account. I just said, man, that was stupid. So I backed off and I started paper trading again. I just kept paper trading,
Well,
paper trading.
I mean, that's wise of you to do too, because honestly, that's a healthy amount of money to lose all in kind of one spot. I did want to just loop back a little bit though.
Yeah.
How much time were you planning on taking off of work to give this a try? Because this is a lot better than me hearing that you just flat out quit your job and you're just gonna go for it and then you lose 2%. So how long were you planning
And
on
Ches
taking
and I
away?
have heard people doing that
Well,
before.
Yep.
So yeah,
I think
that's I totally get.
it was either a week or 2 weeks, and I get 4 weeks of vacation a year. So um, the wife and I, we just, said, well, let's see, if this makes sense. And I thought to myself, well, if I can get really good at trading, maybe I'll retire early. and just, sit around and trade. And
Let me ask you this. What was quote unquote really good at trading? How would you quantify really good at that stage?
well, I'd like to replace my annual salary.
Okay, so that's how you're defining really good. Is it a fair
Well,
statement?
I don't know if it's really good. I would say that's sufficient to do something like that.
Okay, and
And
I just asked this because I'm trying to figure out for listeners, for your sake as listeners, if you're new, pretty much what Fred did was like, you know what, I want to give this a try, and let's just say this is being, he's been hitting off T-ball, he's been practicing with T-ball, and I think I used this analogy a couple weeks ago, but it fits here again. So Fred's T-ball, T-ball, T-ball. All right, I'm going to take some time off from work. I want to be a very good trader. So let's see. All right, here we go. I'm going to throw myself up against a major league pitcher. I mean, that's essentially what Tesla, what he was doing with Tesla in his 10 contracts was going from T-ball to major league pitching, somebody throwing, 95-mile-an-hour fastballs at him. But what I might be wrong here, Fred, but just observing, because I'm thinking, why, Fred, what are you doing? Why are you going 10 contracts? That's big size on a stock like Tesla.
Well,
But it makes sense because you just said in your mind, you wanted to prove to yourself that you could be a very good trader. So very good, as you just told us, you were equating mentally with a number, and this number had to be attached with a salary that you're making from your full-time job.
Yeah.
So in your mind, it probably went something like, all right, well, how do I get not necessarily to 1 year's worth of number, but how do I start to give myself some returns that I could extrapolate out to show that I can meet those numbers?
Yeah, and another.
I would guess that's why you went into Tesla and in such big size, so that you could, quote unquote, prove to yourself that you were, once again, a quote unquote very good trader. Does that sound like maybe I'm barking up the right tree somewhat?
You're barking up the tree very well. And, my intention was to get in there, stay in there maybe 45 minutes or an hour, scalp some out, and get out. And the worst part of that whole day was my original direction and the way I thought things were going was right. If I'd have just had a wide enough stop loss, I'd have ended up having a hell of a day. But I didn't. And it's a stop loss is something I still struggle with.
So it's fair to say that you would have made money had you followed the rules that are taught. Is that fair?
Yeah, I think that's fair. I just got my stop loss too close.
So you got your stop loss just out of, maybe you got a little too antsy with it, and
Well, I just saw the money rolling. I'd be up some good money, and then the next, 5-10 minutes later, I'm losing money. And when it starts going against you with that many contracts, that's a scary thing.
yeah,
I don't trade that many contracts anymore.
right, and let alone on Tesla, which again, the only way I can really summarize it to add context is he went from hitting off the tee to all of a sudden he's playing, he's batting up against a major league pitcher. So, I mean, well, you said you still struggle with the stop loss. I mean, so I guess let's talk about that. In what way do you struggle? You just don't put it in, or you move it away,
I put it
or
in.
you just I mean, walk us through in what ways do you struggle with the stop loss?
Well, it's sometimes I'll get it too close. I'll give you an example of this morning. I'm in the Qs and SPY, and pre-market they're both down. So I was up a little bit, and so I put my stop loss below where I thought, okay, it's probably going to go down a little bit, then bounce up. But they both jotted down just enough to tag it, and I ended up making 10 cents on each contract, but that probably covers the brokerage fees, or maybe part of the brokerage fee at TD Ameritrade. So that ends up being a loss more than likely. I haven't looked at it since I got home, but it got too close. But I would have taken a bigger loss had it continued to move against me, though. So just got to think about that.
Well, I have a slight possible solution, and I want Clay to weigh in on this as well. Have you ever considered cutting your size to maybe 75% or even 50%, and then giving yourself a wider stop loss? So your loss would still be the same amount you had originally intended, but you're going to have a much wider area for stop losses. And obviously it has to make sense with the chart, and I don't know if Clay agrees with that thought process there, but that's just another way, because I used to get cheap shotted a lot. The big solution for me was to cut my size in half. And once I cut my size in half, now essentially, if it goes to a full, blowout stop loss right away, it's still the amount I always intended to risk, but I had a lot more room to essentially be right. And I'm not saying, skew your RVR so it doesn't make any sense. It's just, is that something you ever considered? Or Clay weigh in as well?
No, I have no weighing in other than that's how you manipulate the math, because at the end of the day, like Ches said, it's still, to use $100, it's $100. How you get to that $100 loss, there's you can get creative, and shrinking position size and then widening a stop loss. Yeah, I mean, you can still manipulate things where it's still $100. So yeah, that's one way to go about it.
Yeah, I've been doing that some. When I initially start a position, I'll do it minus 40% of what I pay for the contract, and that usually gives me a pretty good position to run, because I always try to close to the bid rather than slapping the ask. But I had been on these from Friday, and I just got greedy. I didn't, I was up a little bit of money, and I didn't want to take that possible 40% loss. And if I'd even done 40% from where it closed Friday, I'd have probably been all right. Just got too close. It was stupid.
So when you say you're struggling with your stop loss, it's not in the sense of, I don't want to put in a stop loss, or should I even use a stop loss? It's more in the sense of the logistical placement of the stop loss. Is that pretty much what you're struggling with more so?
And it's and of course I know how to look at the chart and spot one. It's just I just wasn't giving it. You know how the market is when it first opens up and it's all over the frickin' place, and then it settles down and chooses a direction. I just got too close. That doesn't happen all the time. I've got a good NVIDIA trade going on right now, but
okay, good. So that makes me feel better. It's not like this is happening all the time. This is just.
No.
Well, I mean, Fred.
I didn't mean that as a complaint. I'm just trying to be open
at the end of the day, I feel like, and this is just me. You've been around a long time, so I know I can shoot straight with you. I feel like maybe you're just playing the hindsight game here, where it's just, I mean, yeah, when you get stopped off, you can always say, oh, well, my stop loss was too tight.
I mean, that could very well be it.
So, I mean, had you sat here and said, and it happened on every single trade, well, then, all right, there's an issue here. But you're doing well. I mean, and like you said, right now you literally have an NVIDIA trade that's going well. So it's not, I mean, am I understanding you properly? This is not occurring on 90% of your trades or 95%.
No, that's
being hard on himself.
Yeah. Okay, that's what it sounded like. Is Ches a man of fewer words than me, but he says the exact same thing I'm trying to get across. Are you just being extra hard on yourself, Fred?
I'm just doing hindsight's 2020. If I'd have gone just a little bit further below where I saw that support at, okay, I didn't do it. I got greedy, but you put that in your book, you learn from it. You put that in your journal, and you periodically you go back and look through those things and said, oh yeah, remember that one, and move on and look at a good one and say, oh wow, there's one that went well, and so.
Okay, now, but let me ask you this. So are you saying that on every time your stop loss gets hit, is in your mind, are you equating that with you did something wrong?
Oh, no, not at all.
Oh, I laid a bear trap for you there, Fred, but you avoided it. All right, that's good. I just want to make sure that you're not forming any sort of faulty mentalities, because sometimes
actually SPY moved sideways today, and
to listeners out there, everything could be perfect. You could do everything perfect, and it could still be a losing trade just because the markets at the end of the day don't offer any sort of guarantee. So
they're unpredictable. I mean, you're using your chart vision and your chart analysis and stuff to know, okay, historically it's when you see this, it does that, but it doesn't happen every time, and that's why we use stop losses. So
exactly. And I just so you can look at you're being hard on yourself in hindsight, but we've interviewed plenty of other people. Ches and I see it all the time, customer service, all that. but you could really be struggling with a much bigger issue, and that is stop loss. What's a stop loss? Oh, I know what a stop loss is, but how do I exactly use a stop loss? I'm not going to put in a stop loss. Or I'm going to keep on moving down my stop loss. It sounds like you put in a stop loss, and it is what it is. Sure, maybe once in a while in hindsight, I shouldn't have put it there. I should have put it someplace else. But Ches, would you agree there are much bigger issues out there in regard to people, quote unquote, struggling with a stop loss?
Yeah, exactly. The big one is not using it and blowing up. So it's just
Right.
a different, it's a much smaller magnitude problem than what I would classify as a big problem. And I mean, it's still a problem. I'm not saying it's not, but it's something that can be remedied over time.
Well,
Yeah,
that's something, you put it together, you look at what happened, and then you tune it, or you say, no, that worked like it worked, and you leave it alone. So it's, your old statistical review of what you're looking at.
Exactly. Well, you threw out you got a good NVIDIA trade going on. Can you walk us through kind of that trade, and then we'll start to wrap things up? But you've been pretty hard on yourself, Fred. Let's build you up here a little bit. Walk us through this current NVIDIA trade that you're happy with.
Well, I got into it, and it moved against me on Friday, but didn't get to the 40%. So I was down money, and today it looked, it had that big old hammer candle or wolf candle in there Friday at the end of the day, and I'm sitting there thinking, this thing, it could go on south, and fortunately today it didn't do that. But I had a stop loss in there, but I had left that one at the 40% of the original value or below on the original contract price. So that one didn't get hit, and it moved up nicely today. But that wolf candle, that was scary.
I'm looking at the chart right now, and I'm glad to hear that you traded what you saw, not what you thought would happen. Because if you had traded what you thought, then that chart wasn't looking so good. But a good example of there's no such thing as a guarantee. Because heck, I think I'm pretty sure I put that one in the newsletter over the weekend on the short side.
You did,
and I think I'll still stand by that because it's still hung up right around that resistance level.
Could.
So it's still
tomorrow it could roll over.
So the RVR is still there from the short side. But I'm not gonna lie that I was expecting probably a little bit different outcome given the wolf candle that had formed. But good. Well, you held strong, and that's the name of the game.
Yeah, it moved up some today, but it could easily, it's more or less sideways right now. Just kind of like SPY went down a little bit and went sideways. So tomorrow's going to be an interesting day. We'll see what happens.
What is your main time frame that you're using to both analyze and then after you get into a trade to manage the trade? Do you have a go-to time frame, or are you using multiple ones, or what?
I use multiple ones, but since I look at it in the evening and I have to put together what I think is going to happen. I'm swing trading the options. Then I go down to an hourly time frame and half an hour and 15 minutes. And when I'm actually putting on a trade and I'm looking at it in the morning before I put in an order, I'm down at the 5 or 2 minute looking, trying to get a feel. Okay, what's this going to do? Which way is it going? Has it moved up or down some? Is it consolidating? Is this a good spot to look to find an option to get in? And that's pretty much how I'm working right now.
Gotcha. Well, obviously there are things you want to work on, and there are, things you are already, the problems that you have can easily be overcome. But what would you say are some of your biggest strengths? Because obviously there's a good amount. You've been in the market, you've been involved in, trading for a long time now. What would you say are some of your strengths that you do have?
My chart vision's definitely come way up. I'm learning how to look at options, and one of the tricks I've gotten into is I'll go a little bit below the bid when I first put in an order, and then on my phone I can go to looking at the overview of those options, and there's a place in there where you can click on depth, and that brings you up the level 2s of the option contracts themselves. And so I look at that, and I can go in there and I can slick Willie in front of the bid price that I'm seeing in the level twos, and that's worked out to help a good bit, I think. And that's one of the things I do. And paper trading option, I'm going to get used to uh, selling options and stuff. And I was doing that back in December, and I got on First Solar. I think I did an iron butterfly on it, and that rascal just took off and went up. And next thing, you know, it was it was like if it'd been real money, it would have been just god awful. It was like 5 grand in the hole in no time at all. And so I got to figure out, okay, where am I going to place my stop losses in that type of situation? But I'm doing that all through paper trading and still trying to figure that kind of stuff out. I did have some very good trades that way, but that one was ugly.
And ugly trades are always good because it reminds you, all right, well, A, this is good, it's on paper, and B, yeah, I need to work on some fine tuning on things, and yeah, that's a good idea and good follow through on your part. Just random, but that's funny you bring up First Solar. Last week, First Solar was talked about, and First Solar is not necessarily a hugely common stock, but here it is, 2 weeks in a row.
I just realized that too. That's interesting.
Yeah, it's kind of random, but
well, the IV percentile was real high on it, and it was trading in a range for a few weeks. And so I looked at it and I said, you know what? I think an iron butterfly might work here. And I probably ended up getting my wings too far out. And so when it moved in one way or the other way, it moved a lot stronger than it normally does for whatever reason. And it was ugly. But I was real glad that was paper. But at any rate.
Yeah, and that is how it goes at times. But that's just the way the cookie crumbles, and that's what makes the markets exciting, frustrating, fun, because you can make probable guesses, you can make high statistical guesses, but there's no such thing as a guarantee. Well, I'm going to steal Chez's time machine, Fred, and I don't think Chez will mind. We'll pay him some sort of rental rate, but I'm going to lend it to you. And if you could go back to some point in your journey, I'll let you pick the spot. Actually, let's just go right back to 87. So 87, and you can't buy anything, so no buy or sell recommendations. But if you could go back to the start, what would be one bit of advice that you'd give yourself?
I would use what's in Grow Rich, and I would make myself take 20% of my pre-tax income, and I would go out and buy blue chip stock every single month.
I love it because that's something people could apply right now all the time.
Yeah.
Just socking it away as early as you can, because we promise you the strategies taught in there have statistically proven a lot of success.
Yes, they have.
No guarantees in the markets.
That's probably, I mean, you kind of snuck around the buy and sell, but you didn't say buy and sell. You just said, I wish I was doing that strategy. And Chez said, this is not theory. This is literally history and mathematics. The way math works says that if Fred had done that, then yeah, he would be. That was a good answer, Fred.
Yeah, it was good. Yeah. But Fred, the only reason Clay actually invited you here to do this podcast, or you volunteered to do it, was because of this one question here. What is your favorite movie?
Oh, wow. There's so many. Marx Brothers movies are great. Love Mel Brooks stuff and Monty Python. But I guess probably the thing that made me laugh over the years the hardest has been Young Frankenstein. And
that's another Mel Brooks one, isn't it?
Yeah, it is. And it's just, I can remember when it came out to the movies, my brother and I, we were teenagers. I guess we were just out of high school or last year of high school or something. We went to see it in a matinee in the afternoon, and we went in there, and it comes up, and it's in black and white, and the credits are going. We said, what the hell? What's this, a black and white movie? And then it starts going on, and they got all the slapstick and the lines, and it's just hilarious. I get a big kick out of watching it to this day. It's just hilarious. Mel Brooks.
I feel like because that's
and
the
Gene Wilder
like
just-
the innocent kind of comedy too, right? It's not raunchy or anything like that, right?
No,
It's
no,
just pure
there's a lot of
lighthearted
innuendo.
fun.
There's a lot of innuendo in there.
I was gonna say innuendos is Mel Brooks' thing,
Yeah.
but I mean, you could
But
still go
it's
with
not
people
like
and no
comedy
one would
now
catch
where
it.
people are just. I mean, it's actually clever, right?
Oh
is
yeah,
what I'm.
very
Yes.
clever.
Yeah, absolutely.
And
Unlike some comedies now where it's like, all right, that was I guess funny, but that wasn't necessarily clever
Yeah.
in the way that was approached.
well,
That was just
there's one scene where he's arriving at Frankenstein's castle, and of course his big thing was, "I'm not a Frankenstein, I'm a Frankenstein." And so they get out of the carriage, and there's a huge door knocking rings on the door, and they're knocking on. He says, "Wow, what big knockers you have!" And Terry Garr goes, "Well, thank you, doctor." So it's it's
yeah,
just stuff like that.
I'm gonna have to. I don't.
Maybe you need to edit that part
Yeah,
out, but
No, that's
that kind of
that's
stuff going
just
on.
that's good. That's good, clean fun. I mean, because they
Yeah.
were clearly talking about the door, so
Yeah.
it's not a big deal. Yeah.
And,
So
and of course, Terry Garr's character took it a completely different way. They're riding in this wagon with hay in it from the train station, and there's a werewolf or something howling off in the distance, and somebody says werewolf, and Marty told him their wolf. He's pointing over to where the wolf was. And they're doing stupid stuff like that all through the movie. It's just hilarious.
that's
If you want a good laugh, you need to watch it.
yeah. If we ever start a movie podcast, Fred, I think we may have to have you come aboard. It sounds like you have all sorts of good movie knowledge and memories, but the show
I'm a
must
lot
go on.
older
Fred,
than
are
you
you coming to the webinar tonight?
Yeah, oh, yeah, sure.
Okay, because it starts in 20 minutes, so I'm not trying to be rude or anything.
No, we probably should get going, shouldn't we?
But yeah, we gotta, because Ches and I still gotta record the intro. For you listeners out there, we are recording this on a Tuesday evening, and as Fred already said, Tuesday evenings are when we do the webinar. So it starts in literally 20 minutes, but we'll keep on moving. But I just don't want to come across as
no,
rude.
no,
'Cause I'm not trying to.
I know we're getting close, and I tend to run off at the mouth
Perfect.
sometimes.
What about food wise? What do you like to eat for?
Shrimp and grits?
No, that's shrimp and grits. That's I can live with that. And finally,
I mean,
before
I
Ches
can't.
asks you, oh yeah, Ches. No,
you're
Ches would
allergic to
die, so
shrimp?
never mind. But before Ches asks you the 3-word question, yeah,
Yep.
he's
It was nice one time, but after your throat's closing up, it's a little less
Yeah.
enjoyable.
What do you like to do for hobbies, though?
Well, I fly a trike, which is a powered hang glider, and I like to go fly fishing and spend time with my wife and grandkids.
Oh, I love that, Clay. That sounds like something I think we're gonna get you to try. Is hang gliding in the air.
Did
what do
he
you
just?
think about
Yeah,
that,
I
Clay?
thought that's what he
He's-
said was hang gliding. I thought that
Yep.
doesn't sound fun at all.
That sounds like
What's up with
exactly
this?
like-
2 weeks in a row, we got a dirt bike junkie, and now we have hang gliding.
I love
What
this.
is-
We're gonna get you to
what
do some new things for the blog or something like that. We'll
As
get
long
you on a
as, long as I
powered
can
hang
wear
glider.
as long as I can wear an adult diaper, then
I was
maybe I'll
just
give it
gonna
a
say,
try.
we'll give you an adult diaper just for
Yeah.
the viewers out there. But
Yeah.
Fred, it was an absolute pleasure speaking with you. Last question for you here.
Glad to do it.
If you had to pick 3 words that summarize successful trading, what would those 3 words be?
Education, be realistic, and use statistical control.
I like that. I like control a lot because without control, a lot of things can clearly go haywire. So short to the point, very well done. And Fred, did you have fun hanging out with Ches and I?
Oh, I did. It was great. It was a lot of fun.
Good. So for you Inner Circle members out there that are maybe teetering on the fence, I don't know. I'm kind of nervous. Don't be nervous. Here we have yet again another person, Fred, had a good time, and there's no doubt in my mind somebody, at least one person, will benefit from listening to Fred and his story and his experiences. And that's kind of the cool thing here is that your personal stories, believe it or not, can help people out. And we get feedback all the time that, hey, I heard such and such on a podcast, and that really helped me out with this. So yeah, for you listeners out there, yes, this is me pandering to you. Please, we would love to have you as a guest to any of you Inner Circle members out there. So Fred, thank you again for hanging out, and thank you again for coming on and doing the webinar a few weeks ago, and now doing this. And I
my
appreciate
pleasure.
having.
Thanks for having me. It was a lot of
Yeah,
fun.
you're a great asset to the community. It's great to have you around. Your loyalty to the live webinars. Does a good kind of keeps my motivation tank fueled, because I like to see the same names show up over and over again, because it's like, all right, at least some people like my jokes. So I appreciate that. And we will have you back on another time for sure to check back in with this options trading and all that sort of stuff. But yeah, don't be too hard on yourself with these stop losses, Fred, because you can't always avoid taking losses. So can you at least promise me that going forward you won't be too hard on yourself?
Oh, definitely. And the worst thing there is something to learn from.
There you go. And I like your attitude towards learning, and you're always looking for opportunities to learn. So before we go, though, a final few things to you listeners. If you are listening on the YouTube channel, please check out the rest of the channel. There's other videos and content there. I hope that you ultimately decide not only to click the like button here, but also to subscribe to the YouTube channel. If you're listening on iTunes or any of the other podcast players, make sure to subscribe there, especially on iTunes. If you'd be willing to take a few moments to leave us a rating, that would really go a long way and help us out. And then finally, if you're listening at claytrader.com on the show notes page, leave a comment down below. We do read those, and we will reply to it. So thank you again to all of you as viewers. Thank you again, Fred. Thank you to our esteemed co-host, Ches. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit ClayTrader.com.